Hey everyone, after a long time I'm covering a new IPO of Premier Energies that is already creating a lot of buzz in the market. Now if you're someone who is only looking for a tip to make quick money from IPO, you can skip this video. There's an excellent grey market premium of more than 80% on the company. So listing is expected to be great. However, it's a lottery and very few people would get it. The key question is it worth investing in the company post IPO? Because one lot of IPO allotment won't make any difference in your life. If company has multi-fold growth potential, it's important to understand its business model and identify if it is worth investing in the company post IPO or not. Also, these days there's a lot of hype around solar stocks, and I'm sure majority of people have no clue about the value chain of solar sector, how it operates, and key players in this space. So in this video, I've explained the entire solar value chain along with detailed analysis on Premier Energy's business model, along with its future growth driver, financials, IPO detail, valuation, and key risks that would help you to get all the required details to consider the company after listing. But this video is only for long-term investors who are genuinely seeking knowledge. Alright, let's get started. Premier Energies was established in 1995. So company has a vast 29 years of experience in solar industry. It is involved in first manufacturing of solar photovoltaic cell, in particular bifacial monocrystalline PERC cell. So PERC is a technology used in solar cell manufacturing. Second, company is also manufacturer of solar modules. Then third, it is involved in execution of EPC project that include end-to-end solar services. And then fourth, company is also involved in operation and maintenance. And finally, it has its independent power production through 2 megawatt solar power plant in Jharkhand. In short, Premier Energies is an integrated player with presence across the value chain of solar power sector. Some of its clients include NTPC, Tata Power, Panasonic, Shakti Pump, First Energy, Luminous, and so on. Now this is very important. As an investor, you should understand the value chain of solar power and understand which company fall into the various stages of this value chain. So let us first understand the solar power value chain. Solar PV module value chain include 5 critical processes for transforming raw material, which is polysilicon, into finished solar panel that are ready for electricity generation. First of all, polysilicon is used as a raw material which is purified and refined into high purity monocrystalline ignots. This stage requires significant energy consumption. Ignots are then sliced into thin single crystal silicon wafer. These wafers goes through a very complex process of value chain, which is solar cell manufacturing, that include steps like texturing, diffusion, laser, and so on. These solar cells are then connected and encapsulated with protecting layers like glass, encapsulants, and framed for durability and installation. While module manufacturing is more of an assembly process, cell manufacturing on the other hand is the most complex process in solar manufacturing value chain. Cell manufacturing is exposed to multiple risks and attract 3 to 4 times higher investment. However, this is a high margin business and key for sustainability in the future. Now, once solar modules are ready, they are procured by solar EPC companies along with inverter, cable, and all the items from the market. And these EPC companies then install these solar systems. For instance, SW Solar is India's largest solar EPC company. Please note that EPC is a low margin business. Then Waaree Group is a leading player in Indian solar value chain, where Waaree Energies is the largest solar module manufacturer in India. Although it's not yet listed on the stock exchange, but it would be interesting to see when Waaree launched this IPO of Waaree Energies. Then Waaree Renewable, which is a subsidiary of Waaree Energy, is the EPC arm of the company, which is a listed business. Finally, you have power producers like NTPC that use the solar power setup to produce power. For instance, Tata Power is a complete integrated player in solar sector with end-to-end solar cell manufacturing, module manufacturing, EPC work, as well as power production. Likewise, Premier Energies is an integrated player. I hope you got a fair idea of solar power value chain. You can't invest money in any solar company randomly. For more such knowledge, you can also explore my weekly video series that include one exclusive video every week where I discuss many potential ideas, including high conviction stock where I am investing my own money. The idea is to share my knowledge and conviction for long-term wealth creation. I also track more than 200 quarterly results to identify potential opportunities. You can get the detail on my website or explore the join button on this YouTube channel. Next, let us look at the solar module and solar cell manufacturing segment in detail, where Premier Energy has its presence. So today, India's module manufacturing capacity has reached approximately 72 gigawatt as of FY24. This positions India as the third largest solar module manufacturer in the world after China and Vietnam. Now, as of today, there are more than 100 solar module manufacturers in India. However, top 10 manufacturers have a cumulative manufacturing capacity of 50 gigawatt out of 72 gigawatt as of FY24. This slide shows the solar module annual installed capacity by companies in gigawatt and percentage share in FY24. Waaree Energy is leading with 17% share, followed with Renew Power that has 9% share, Tata Power has 7% share, Premier Energy has 6% stake. So it is at 4th position, followed with Mundra Solar, which is part of Adani Group, Ryzen Solar, Vikram Solar, and so on. Please note that solar cells are the most crucial element of solar module, which is responsible for converting sunlight into electricity. Although India has 72 gigawatt of solar module manufacturing capacity, Indian solar cell manufacturing is only 8.1 gigawatt as of FY24. The reason is solar cell manufacturing is a very complex process that requires high expertise. As a result, India has to import these solar cells from China. So there is high dependence on China. Currently, there are very few companies involved in solar cell manufacturing, and Premier Energy is one of them. This slide shows solar cell annualized installed capacity by companies in gigawatt and percentage share. Mundra Solar, part of Adani Group, has 50% contribution in total installed capacity, followed with Premier Energies with 25% contribution. Then you have Jupiter Solar, Websol, which is a listed company by the way, and then Tata Power. Although solar cell manufacturing scenario is fast changing with more than 15 companies planning to set up various level of integrated solar manufacturing plants, including solar cell. Most of these plants will be commissioned by FY28. Now, one of the strengths of Premier Energy is its capability of integrated solar cell and module manufacturing. While there are many players in solar module manufacturing space, including the Waaree Group, there are very few players in solar cell manufacturing. And Premier Energy, with 29 years of experience in the solar manufacturing industry, stand out as the second largest integrated player in India at the end of FY24. Out of the current top 10 solar module manufacturers in the country, only 3 companies, that is Mundra Solar, Premier Energies and Tata Power, have integrated solar module and cell manufacturing facility. Premier Energies invested in integrated solar cell and module manufacturing to gain greater control on module prices. This backward integration has helped the company gain access to domestic DCR module market, which requires solar cell and module to be manufactured in India, and hence resulting in greater cost control for the company and improved traceability of raw material. By the way, solar cells exports from India are expected to increase in coming year as USA is ramping up its module manufacturing capacity and China cannot sell due to certain trade barriers. So this China plus one strategy would play a key role in Premier Energy's export market growth. In fact, Premier Energies is the largest Indian exporter of solar cell to the US in FY24, which is almost 100% of the market share. And US is one of the largest market for solar modules globally. Here, one of the most important thing you should know that there are various technologies in solar cell manufacturing, and it is an evolving thing. The reason behind evolution in technology is to make solar cell more efficient, and this is a key to growth for company. Those who work on latest technology of solar cell will benefit from it, and those who fail to evolve cannot sustain. This slide shows shares of different solar cells in the future. Currently, PERC technology has highest share, but it is expected to decline in the future. You can see that it has efficiency of 23.6%. Then you have TOPCon with better efficiency that will command a bigger market in the future. However, technology is evolving and by 2026, Tandem is expected to make an entry and grow quickly because of highest efficiency. So solar cells are very complicated and you need to track the development in solar cell technology to ride the innovator in the sector. Now this slide gives the breakup of company's revenue in FY24. 86% revenue of the company was from sale of products it manufacture. That includes sale of solar cell that contribute 22.48% in the revenue and sale of solar module that has highest contribution at 64.3%. Company also generated income from sale of traded goods that contributed 8.2% in FY24 revenue. Then EPC projects contributed another 4.7%. Revenue from power supply is minute. In terms of import versus export, domestic market contributed 86% in FY24 and export contributed 14%. Now let us try to understand the key growth driver for solar sector and Premier Energies. Now one of the biggest growth drivers for the sector is urbanization and industrialization, fueling the demand for electricity in India. In the next few years, the demand for electricity is going to increase multifold times due to factors like migration of people from rural to urban part of the country that would consume more power. Then growing middle class with rising disposable income is fueling demand for appliances. Then modern factories rely heavily on electricity. As industries adopt automation and advanced technology, their consumption would increase even further, creating huge demand for electricity. Then second driver is rise of electric vehicle. 21st century is witnessing a major shift from petrol diesel vehicle to electric vehicle. By 2030, government is targeting 30% EV penetration for private car, 70% for commercial vehicle and 80% for two-wheeler and three-wheeler. If we can achieve even 70-75% of this target, there is going to be a demand for 20 lakh charging stations in India to cater to this scale of EV vehicle. This will create a massive demand for electricity in the years to come. Then third, government focus to make India a global manufacturing hub. There is no doubt that Indian government is keen on increasing contribution from manufacturing sector that currently contribute around 17% in India's GDP. That's where government has launched various schemes like PLI, Make in India, Atmanirbhar Bharat and so on. For instance, Indian government has implemented PLI scheme on high efficiency solar PV module with an outlay of 24,000 crore. Then government has implemented DCR policy that mandates a specific percentage of component including cell and module used in solar power project, particularly those funded by government, to be sourced from domestic manufacturer. Indian government also levies various duty on import of solar cells and modules, effectively acting as a protective shield for domestic manufacturer. These duties are applied irrespective of the origin country, thus making domestically produced solar cell and solar module more attractive to domestic solar players. Then fourth driver is massive solar installation plan of Indian government. India is making a big shift from coal to renewable energy primarily through solar power. Installed power generation capacity in India is expected to reach 620 gigawatt by 2028, and renewable would account for approximately 54% share of this installed capacity. This slide shows the installed power generation capacity in India by fuel sources. In FY18, out of 344 gigawatt of power, coal contributed 223 gigawatt, that is 65% of total capacity. Solar, which is in green color, was 22 gigawatt. In FY24, power capacity increased to 442 gigawatt, and within this, coal contribution is 243 gigawatt. Thermal contribution has reduced to 55%. And solar contribution in total installation is now 82 gigawatt, which is a growth of 24.8%. And as per Frost and Sullivan report, the total installed capacity would reach levels of 622 gigawatt by FY28. Out of this, 198 gigawatt is expected to come from solar. So that's another 24.8% CAGR growth expected in solar installation in the next 4 years. Clearly, solar power is going to lead the growth in renewable energy in India. Then fifth growth driver is solar power has the lowest tariff rate across fuel sources in India. This is a very interesting slide that shows the average cost of electricity supply and average solar tariff in rupee per kilowatt hour from 2010 to 23. In 2010, average cost of electricity supply was 3.6 kilowatt hour. Now that has now increased to 6.7 rupee. However, average solar tariff rate has significantly reduced from 11 rupee to 2.5 rupee. Comparing all type of fuel sources, average solar tariff in the country is even lower than many thermal power plants. This indicates a sustainable and viable future for solar energy in the coming years. And the fact that India is blessed with ample sunlight, probably the highest among the top economies in the world. So if we can harness this solar power efficiently, we can significantly reduce dependency for import of fossil fuel, and in fact, we can become the net exporter of power to the world in the next few decades. And that would be a huge achievement for the company. Now let us look at company's financial performance. So this slide shows the historical financials of the company between FY22 to FY24 and then Q1 of FY25. Please note that this data is in million rupee. So revenue has grown from 742 crore to 1428 crore, then 3143 crore. That's more than 4x growth in last 2 years. And Q1 FY25 revenue is already half of FY24 revenue. So company's top line has grown at a very fast rate in last 2.5 years. EBITDA has also grown at exceptional rate from 7% to 15% and now at 22%. Company was in loss at profit level due to heavy investment but has become profitable in FY24. Profit before tax stood at 289 crore. Interestingly, in Q1 of FY25 itself, company has made 245 crore of profit. So again, exponential growth. Company's ROE and ROC have also grown at a very fast rate and today it commands a very high profitability. On debt, company has a current debt of 1200 crore and that translates to debt to equity of 1.86. So debt of the company is on higher side, which create a risk in case there's a problem in the business. As of today, company has an order book of 6,000 crore. So there's a good visibility for the company. Overall financial looks good, but it's important to track the future growth and ensure that company is able to sustain this growth and margin. Only catch as of today is higher debt. Now let us look at the IPO details. So Premier Energy IPO window is between 27 to 29 August. Price band is 427 to 450 rupee. Issue size is 2,830 crore. Out of this, there's a fresh issue worth 1,291 crore and an offer for sale worth 1,539 crore at an upper cap. This 1,291 crore of fresh issue would be utilized for investment in the subsidiary Premier Energy Global Environment Private Limited for part financing the establishment of a 4 gigawatt solar PV TOPCon cell and 4 gigawatt solar PV TOPCon module manufacturing facility in Hyderabad, Telangana. Currently, company has got 2 gigawatt of solar cell manufacturing, so the goal is to make it 6 gigawatt and has 4 gigawatt of current solar module manufacturing facility with goal to make it 8 gigawatt. So massive expansion plan on the card. Please note that this manufacturing plan of the company has a total capex of 3,400 crore. Out of this, 1,200 crore would be utilized from capital raised from this IPO and remaining 2,200 crore would be via debt. This is on top of the current debt of 1,200 crore. So after this, the debt of the company would increase to 3,600 crore. Before IPO, promoter stake in the company is around 72% and after IPO, it would dilute to 66%. The good thing is that majority of stake sale in the OFS is from a PE firm that invested in the company in 2021. Promoters are not diluting their stake significantly. Premier Energies has already completed the anchor investment ahead of IPO and company has received stellar response from both FIs and DIs, including names like Nomura, BlackRock, Government Pension Fund, SDFC, Abu Dhabi, ICICI, Nippon, Ashoka White Kotak, Axis, Quant and so on. A total of 60 mutual fund houses, a total of 16 mutual funds from various FIs and DIs have applied for this IPO. That clearly shows the interest among institutional investors in the company. Finally, if you look at the valuation, at an upper price band of 450 rupee, company would command a market cap of 20,284 crore. This is against FY24 sale of 3,171 crore. However, company has already achieved half of FY24 revenue in Q1 of FY24 itself, where revenue stood at 1668 crore. And company's PAT for FY24 was 231 crore and Q1 of FY25 PAT itself is 198 crore. Company's EPS for FY24 is 5.9. So post IPO and dilution basis of FY24 earning, company would command a PE of 85 post IPO, which is certainly on the higher side. But remember that in Q1 of FY25 itself, company has generated a PAT of 186 crore, which we have not considered as we are looking at FY24 earning. Going forward, everything would boil down to future earning growth. If company can sustain its growth, share price can further go up. But the catch is that this IPO is already hyped. So company is already commanding a grey market premium of more than 80%. So post IPO with 80% premium, this issue would become expensive. It means if you don't get the lottery, it's better to wait for better entry point and track the company quarter result. Now before you invest in IPO, let us look at the final part of the video, which is very important, and that is key risk. So the first biggest risk is Chinese competition. India does not have sufficient capacity for solar cell and there is no capacity for polysilicon, ignots and wafer manufacturing. It means the entire solar program is vulnerable to disruption in supply chain and strategic pricing by Chinese sources. Second risk is adverse change in government regulation. Today, Indian solar industry is growing in spite of extreme competition from China, and it's because of government support in terms of various policies like PLI, Make in India, Atmanirbhar Bharat and so on. Government even put anti-dumping duty on import of various products to benefit domestic Indian company. However, any adverse change in government policy can pose high risk to solar sector profitability, and this is one of the biggest risks for the industry. Then third risk is domestic competition. There are already many players in the sector and there's a growing competition in the solar industry. So it's not easy to maintain margin. Only integrated companies that are backward integrated like Premier Energies can sustain this competition. But for them also, it's important to maintain their profitability and ensure that they do not dilute margin for growth. So this competition risk would always exist. Then fourth risk is concentration risk. Top 5 customers of the company contributed 43% in company's FY24 revenue. So there's a dependence on selected few customers and any loss of revenue from top customer can impact company's top line and bottom line. Fifth risk is raw material cost risk. Companies' manufacturing operation rely on a stable supply of raw material and component, including your silicon wafer and your other critical inputs. So disruption in supply chain due to geopolitical tension, then logistical issues or supplier insolvency could result in production delay, increased cost, and an inability to fulfill customer order. So raw material risk would also exist. And final sixth risk is technology risk for solar cell. As rapid advancement in solar technology can make existing manufacturing processes obsolete, technology risk for solar cell is also a key factor to consider. So in this video, we discussed the business model of Premier Energies along with the entire value chain in solar power. Like I said earlier, there's a hype around solar sector in the last few years and people are blindly investing in solar companies without trying to understand the value chain and which player fit into which part of solar value chain. Premier Energies is a leading player in the country with integrated solar cell and module manufacturing. There are currently only 3 players with integrated solar business and Premier Energy is one of them. Especially solar cells are extremely complicated part of the value chain where Premier Energy has the expertise. This would help them command a better margin over other players. Company has been growing at a very fast rate in the last few years, but we only have last 3 years of data points. There is certainly a lot of potential in the company. Solar is a sunrise sector with multi-decade growth potential, but won't be a smooth ride. Now there's certainly a lot of potential in the company where solar is a sunrise sector with multi-decade growth potential, but it won't be a smooth ride. There are many risks in the business, especially solar sector has dependence on government scheme and anti-dumping duty. Otherwise, Indian solar companies can't sustain Chinese competition as Chinese companies are global leader in solar sector. So it's very important to track the growth of the company while keeping all the key risks in mind. Friends, it took me a lot of time to compile this knowledge. I hope you'll appreciate it. Thanks for watching this video. I'll see you next video. Till then, take care.